Becoming a consistently profitable trader seems to be the holy grail that every trader is chasing. But how do you actually become a consistently profitable trader? I'd actually argue that most traders don't even know what consistency in trading means, because if they knew that already, they would have already achieved consistency in their trading. So, in this video, I'll be giving you a quick brief on what consistency in trading actually is, and I'll also be sharing with you the practical steps that you can start taking today in order to achieve consistency in your own trading. For those of you who are brand new to this channel, well, first of all, welcome. My name is Shaun. I've been trading the markets for 8.5 years, and I actively trade US equities, or in other words, I day trade American stocks. And this channel is all about no BS, straight to the point trading content. So if you want to really accelerate your own learning curve and be on the right track when it comes to developing your own trading skills, consider subscribing to this channel. And with that, let's actually get to the video. So let's quickly go over what consistency in trading is not, because a lot of developing traders seem to have a misconception about this. Trading consistency does not mean having a very high percentage of win rate, or doesn't mean that you're making $500 every single day, or doesn't even mean that you're putting out green trading days every single day. They all can be byproducts of being a consistent trader, but they do not mean consistency in itself. So then what is consistency in trading then? And to explain this better, let's actually take a step back and pay attention to this one, because this is going to be important. If you really just take a step back and think about the word consistency itself, all it simply means is being able to do something over and over and over again, right? And when it comes to trading, all it simply means that a trader that has a profitable trading strategy, or a strategy that has an edge in the market, they have the ability, or they're able to execute that strategy flawlessly every single time without making any trading mistakes. So it's the ability to be able to execute that strategy flawlessly is what defines a trader has consistency in their trading or not. And key word over here is that a trader's ability to execute. So how do you actually achieve consistency? Let's actually go over the steps that you can start taking in order to achieve consistency in your own trading next. Hey guys, just a quick segue. If you're tired of losing money in the markets and you're serious about becoming a consistently profitable trader, then check out my mentorship program designed exclusively for people who are serious about learning how to trade. This is not just another course giving you information, but this program gives you a real transformation in your ability to successfully trade the markets. You see, traders who are serious don't lack passion or work ethic, but they lack proper guidance and clarity on what exactly do they need to focus on in order to achieve consistent profitability. They keep going through books, videos, courses, gathering more information, thinking that they're working hard and getting closer to their goals, but in reality, their account still keeps bleeding. They're constantly feeling stuck, frustrated, and angry in themselves, unable to understand the nuances of the markets, which also makes them lose confidence and even experience a sense of shame for spending months and even years and still having nothing to show for. And mainly, they start to lose hope, doubting that if they're even cut out to become a profitable trader. If this sounds like you, I understand. Trading is hard, and being stuck in that cycle of frustration and being clueless about what exactly is missing, that feeling is absolutely brutal. And I know this because I was stuck in that cycle myself for almost 6 years before finally breaking through and becoming a consistently profitable trader. And I was only able to do that by building a deep understanding of my edge and gradually perfecting my ability to execute my edge. And if you're serious about learning how to trade stocks, then you must check out my program, which is designed to take anybody from not knowing anything about the markets to becoming a consistently profitable trader in the fastest way possible. You learn everything about trading from the ground up, and combine that with ongoing hands-on mentorship and feedback sessions, which are designed to keep you on track and accelerate your learning curve. So if you really want to transform yourself from a market participant to a profitable trader, then all you need to do is go through these 3 simple steps. Number 1, schedule a call with the link in the description below this video. Number 2, on the call, help me understand exactly what your goals and your challenges are with trading. And finally, number 3, on the call, I'll walk you through exactly how the program, mentorship, and feedback sessions are designed to help you go from a beginner to a consistently profitable trader. And if it sounds like a fit and you have a professional attitude towards trading, then you can decide to enroll into the program. So if you're an absolute beginner or a struggling trader, tired of losing money, wasting time, and wants to become a consistently profitable trader, then schedule a call with the link in the description below this video. You see, Too many traders are unnecessarily struggling for years in the markets, focusing on doing all the wrong things. And all you need to do right now is decide, do you want to take the first step and learn how to trade stocks the right way so you can start approaching markets with clarity? Feel the confidence in having the ability to extract money from the markets. Consistently keep growing your account and make trading your primary, secondary, or retirement career. Have the freedom and flexibility to live the way you want. And finally, just stop feeling so stuck, confused, frustrated, and mainly just stop wasting time on doing all the wrong things. Now let's get back to the video. Now let's actually go over the steps that you can start taking in order to achieve consistency or develop your consistency in trading. And the very first step would be to make sure that you have the next four things that I'm about to share next. You must make sure that you have all of these four things laid out. And the very first thing is that you must have a profitable trading strategy, a strategy that has an edge in the market. You must make sure that you already have that, obviously. And number two would be that you have a very well defined, crystal clear trading plan or trading process, regardless of what you decide to call it. But you must make sure that you have a very well defined trading process in check, in place. And this trading process could really have all the informations, such as what do you do before you start looking for opportunities in the markets, or what do you do, what sort of routine do you follow before you even try to open up all your screens and look at the markets. Second, you could have like, what is a good opportunity for you in the market, and how do you find your opportunities in the market? Maybe you use certain scanners. What are your scanner settings like? How do you plan your trades? How do you enter your positions? How do you scale into your positions? How do you manage your positions? How do you exit your positions? And it has to really be in detail, everything about like, what if your prices, or what if your stock doesn't reach your target, but what are the valid reasons for you to prematurely exit, but valid reasons for you in those scenarios. So it must have all the details laid out in front of you. Number three, you need to have a journal, and you have to be very active when journaling your own trades. Doesn't really matter that you're journaling your trades on a notepad or Excel sheet or maybe any of the journaling tools, softwares, or subscriptions out there, but making sure that you have your journal and you're actively journaling your trades as well. Number four, you must understand market fundamentals, or really have solid foundational skills about trading. And to explain this better, I'll give you an example of a trade that I had taken earlier, or just last week. Today, at the time of recording, it's 7th of April, 2025, and I took this trade on Friday last week. And right now, what's happening with the tariff, like, all the markets is just kind of moving to the downside pretty aggressively. For a lack of a better word, they're crashing, I guess. So this is what's happening in the markets. And normally what I do is I look at my pre-market routine. Like right now, I still have like another 30 minutes for me to start looking for good opportunities to trade in the markets. But on this day, I wasn't looking at stocks. Why? Because all the stocks were just going to be moving to the downside. If I find any long opportunities to trade in the markets, they're not going to do so well because the overall market looks like it's going to be weak, and there's a very good fundamental reason for the market to continue to move to the downside. That's number one. Any long opportunities is not going to work. Why? Because 80% of stocks tend to follow the overall market in the same directions. And if I look for any short opportunities, most of the stocks or individual stocks are more likely to hit the SSR limits, especially if they have a solid catalyst for that day. SSR simply stands for short sell restrictions. So in those cases, a lot of times the stocks might just get squeezed up, or they might just sort of go sideways or move a little bit more choppy. So I knew just to normally that I trade stocks, but not to trade stocks that day. And at the same time, overall markets and ETFs such as SPY, IWM, and QQQs were more of a better trade because the entire market is just moving in a similar direction. And normally what I do is trade stocks, now not to trade them. And I was only able to decide this because I had solid foundational skills about the market, and I was able to critically think what to do and when to sort of follow my strategy and when to sort of deviate a little bit from my own strategy, given like that I understand market conditions and market situations. So you must make sure that you have solid foundational skills. And because I had these things, I was just more keen on trading the SPY as the ETF for S&P 500 and QQQ. Even more, or first opportunity for me was to trade QQQ because QQQ again is an ETF that tracks all the tech stocks, and tech stocks. So overall, the stocks is a riskier asset in itself. And when it comes to tech stocks, they tend to be slightly more riskier compared to Fortune 500 companies, obviously, right? So they're more likely to fall or more likely to make an aggressive move to the downside. So I was able to shift my focus to trading these rather than individual stocks. And this was only possible because I understood when to sort of follow my strategy to the T and when to sort of deviate from a bit, because the foundational skills of the markets, right? So you must make sure that you have all of these four things laid out in front of you. And if you don't have all of these four things in check, consistency is not even your main challenge. Consistency comes way, way down the road once you have all of these things in place. Once you have all of these four things in place with you, let's move on to the next one, which is really step two, to analyze your own performance. And if you have a journal, just start looking at all the previous trades that you've taken. Maybe take a look at previous 20, 30 trades of yours and see and compare them. What were your trading actions? When did you, or what did you do in the markets? And what was your trading plan supposed to actually dictate for you to do? Start comparing what was the actual, what were the actions that you were supposed to take and what did you actually do in the markets? And really just start identifying the mistakes that you're doing. If you're still not profitable, really there might be mistakes. And these mistakes could be you're entering too early, maybe entering too late, or exiting your trades too early and leaving a lot of money on the table, or a bunch of things. It could be a lot of different mistakes. A lot of different traders have their own set of challenges and their own set of mistakes, but really just start analyzing what are the mistakes that you are making and start fixing one mistake at a time. Don't try to fix up all your trading challenges in one single go, because that doesn't really happen, and it really doesn't. It's just simply not going to help you. So start fixing. Maybe if it's your entries, then start fixing your entries. Find out what is causing you to mess up your entries and start fixing one thing at a time. Really just go back to your journal. What do you actually do? If it's just entering early, start giving yourself more specifics about your entries and start fixing your entries that way. And if it's exiting early and leaving a lot of money on the table, start being more specifics on what exactly your management rules are when it comes to trading, and start following them, and gradually just keep pushing yourself a little bit more to do a little bit better each trading session. And over a period of time, if you just keep tackling one trading mistake at a time, over a period of maybe like few months, you would see that your profitability and your trading results improve, because you as a result are able to execute your trades better because you worked on developing those skills, execution skills. That's how you gradually and slowly but surely really achieve consistency in your own trading performance. Not because there is anything, if you decide to trade, forex is better or crypto is better or stocks are better. It's because you as a trader are being able to trade much better. This is actually the hard part, or hard work in trading, is journaling your trades and reviewing your own performance and trying to fix up each of your trading challenges. This is what actually is the boring work, the monotonous work in trading that majority of traders don't really do. And majority of traders don't really see the results in their trading because they don't do the necessary things. And if you can start doing this, you're going to be surprised how quickly your developmental stages, or how quickly you start seeing profitability or really good results with your own trading. And also another quick tip is, don't go too harsh on yourself. Allow yourself a reasonable amount of time. And I say reasonable because don't go too easy on yourself, and also don't go too hard on yourself. Because sometimes a lot of traders tend to have, including me, I personally definitely did had this issue a lot, where I was just too hard on myself to the point where I was just constantly beating myself down. And I used to have this attitude where don't make a mistake, don't make a mistake, don't make a mistake. And when we have this sort of thing or dialogue going on in our heads, what tends to happen is we go into the live markets and we keep saying this to ourselves. And what ends up happening is we end up making a bigger mistake, or at least we end up repeating our mistakes. So don't go too hard on ourselves, but also don't be too easy on yourself. Allow yourself a reasonable amount of time to develop your skills and gradually improve. All these improvements in your trading are not going to come overnight, but if you deliberately focus and deliberately keep working on them, you'd be surprised how quickly they end up coming to you, and how quickly you start improving as a trader. So there you have it, guys. This is the realistic way to achieve consistency in your own trading. Now, just actually go out there, start looking at your journals, start looking at your previous trades, and start improving. And even when you do improve and you start experiencing profitability, there's always going to be more room for every single trader to get even better and get to the next level. So even if you're a profitable trader, start looking at how can you increase your profitability. How can you squeeze like 30, 40, 50 extra cents from the market from every single trade? Or how can you improve your entries a bit better? How can you scale into your trades a bit better? So that's the realistic way to just constantly journal your trades and look for ways in order to become better and consistently grow as a trader. Hopefully you found this video useful or helpful. If you did, please consider hitting the like button, as it really helps the channel with the YouTube algorithm. And if you want to see more videos just like this one, consider subscribing to this channel. And with that, I'll see you in the next one, guys. Take it easy. Cheers.